are taken pretty well. But let's get to Allied Blenders and Distillers. The company reported a strong Q3. The stock today is up only about 2%, but in the last 3 months, it's seen a gain of close to about 22%. Revenues have surged nearly 8%. The EBITDA has doubled, and the company saw its margins rise in the quarter gone by. Alok Gupta, Managing Director of Allied Blenders and Distillers, is now with us on the show. Thank you very much for joining in. This is Reema here. First, explain the margin expansion to us, and can you build on margins from the current level?
Thank you so much for inviting me on the show. On the margin expansion, there are 3 key drivers. One is sort of market share improvement in higher margin accretive markets. Secondly, continuous focus on our cost optimization program. And third is some packaging substitution that we've been doing. And these 3 things put together are consistently helping us improve our gross margins. To your second part of the question, will our gross margin improve? The answer is yes. As we have already explained earlier, that we are on our capex journey. We are going from being captive on ENA to 100% captive on ENA, similarly on malt, and similarly on 1 or 2 packaging items. So over the next course of 2 or 3 years, we believe there is significant scope for us to improve our gross margins.
How much in 2 to 3 years from the current 12%? Can you scale it up to 15%?
Yes, we have been consistently talking about getting to an industry parity EBITDA, which we have put at 15%, and all the work that is currently happening is in that direction. So we believe we are on the right track.
Mr. Gupta, could you help us with the volume and realization targets, number 1 for FY25? So Q4, what can we expect, as well as FY26? Also, you mentioned that you're looking to increase the captive ENA mix as part of your input strategy. Where is it currently, and when will it get to a total 100%?
So as we speak, we are currently at about 1/3 capacity on our ENA. We have acquired a unit in the state of Maharashtra that will allow us to add another 5% of our capacity. So that will take us to broadly about 40%. On the same acquisition, what we've done, we're going to put another 150 KL plant that gets us to about 2/3. So over the next 2 or 3 years, we'll get to about 100%. So I would say exiting FY27, we will move from being 40% captive to about 100% captive.
And the volume and realization targets for 25 and 26?
The P&A share of our volumes has increased by another 2% Q3 over Q2. We have targeted to get to 50% of the P&A volume. That should also have a significant impact on our volume, our NSV realization, which are up by about 1.3%. We think the same trend will continue. On the volume side, we've grown about, my sense is we should look at early double digit in Q4 is what I think where we'll land up.
Okay. And you can maintain this double-digit growth even in FY26 in terms of volumes?
Well, the target is to get into early double-digit volume growth and maybe mid double-digit value growth. And the strategy and the brand portfolio, the way it's getting curated, is towards achieving these 2 KPIs. One is double-digit volume and maybe mid double-digit value growth.
And then eventually 15% margins as well in the next 2 to 3 years. So talking about strategy, you've made a strategic investment in Good Barrel Distillery, which is a premium rum brand, Rock Paper Rum. Now, you're acquiring only a 51% stake. You're paying about 9 crore. So take us through this investment. Do you have plans to raise your stake further from the current 51%? And what do you hope to achieve from this investment?
Well, the way we've structured the deal is that we are acquiring 51% with an option to buy 100% over a period of time. I think this is a brand that is coming off from very exciting startup world. We definitely want the founder CEO to be completely invested on the brand in terms of sort of building the brand and building the brand narrative, not just for India, but beyond India. This segment where this brand is operating is between 3 to 4 million cases, high gross margin, reasonable double-digit growth. So it's part of our premiumization strategy. We believe that there is only one significant brand in this segment, and I think consumers are looking for newer brands. So Rock Paper Rum has been around for a year and a half. They already have 5 very exciting variants. So we believe that we should be targeting high double-digit share from this 3 odd million cases in time to come.
Mr. Gupta, we want to understand whether do you have any overdue spending as far as the southern states are concerned. In fact, one of your peers, UBL, had significant issues with Telangana, quite a lot of to and fro over there. And also, how has the Andhra market picked up? So any overdues there, and how is Telangana as well as Andhra looking?
So first, a quick one on the Andhra market. In Andhra market, post the new policy implementation, we have gone up from about 1.8 million cases that we did last year to about a 3 million ARR. So it's been very, very beneficial for us in terms of volume growth. The entire ordering process, collection, replenishment model is working to our satisfaction. So Andhra market is running stable state, and we've grown from 1.8 million to about a 3 million case ARR. Telangana market, the good news is that we are consistently getting our payments month after month. However, there is an overdue overhang, which we think will take a little bit of time to correct. That's our outlook currently.
Thank you very much, Mr. Gupta, for joining in, and wish you all the very best. Look forward to these conversations. Get into a break.